President Trump referred to this as the operation is over and the patient has lived, but the stock market reaction has been very negative. The markets have become risk off, and it's because of Tariff Liberation Day, which was April 2nd, has triggered a lot of concerns for investors because it was worse than expected. One of the reasons stocks were reeling is that investors were hopeful that these tariff levels would actually be dialed back, but Commerce Secretary Lutnick made multiple media appearances and insisted that President Trump is not going to back off, and that added to selling pressure. That's not what I would have expected, and I don't think a lot of people expected. It was a negative surprise. Implementation date for the higher rate is April 9th. That is a delay, and I think that's intentional. And in fact, Trump himself, he says, tariffs give us great power to negotiate. And I think probabilities favor a negotiation. And if not, then of course there's a greater risk, which is a recession. And JP Morgan puts the odds at 60% of a recession if the tariffs are sustained.
Today we have Bitcoin bulls Plan B and financial analyst Tom Lee giving their Bitcoin, crypto, and market prediction for the coming weeks and what we can expect in 2025. Historically tracking the price in the year following the Bitcoin halving and on the heels of multiple all-time highs, they believe this year will be the beginning of a massive $400 trillion inflow of capital into Bitcoin. The current price for Bitcoin sits just over $78,700, down almost 5% just this week. They discuss the extreme volatility we've seen recently, and in the coming months, we'll witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story will become even bigger in 2025 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially. This has caused a never-before-seen supply-demand imbalance for Bitcoin, and everything is about to change. Let's get right into the latest interview with Plan B and Tom Lee as they give their market prediction for what's coming in the days and weeks ahead.
The reason for the recent drop in Bitcoin price has nothing to do with Bitcoin at all. It has to do with the general economy and Trump and the tariffs and all the volatility and uncertainty that causes in the markets. Now, Bitcoin dropped from 84,000 end of February to 82,000 end of March, and that is not the V-shaped recovery that we hoped for. However, the black line here, the 200-week moving average, is still going up from 44 in February to 46 in March. And that's a bullish sign. Also interesting, if we look at the geometric mean, which is also a moving average but calculated slightly differently because it fits better the logarithmic scales and the compounding effects of financial markets. But if we look at the two lines, the normal moving average and the geometric mean, they are very close together. And that means volatility is getting lower. Volatility was very high in the beginning of Bitcoin, and we see the lines separated from each other, and it gets smaller and smaller, and now they're almost similar. Does that mean there will be no more bull markets and also no more crashes and bear markets, and that we have a steady but upward going growth, which isn't too bad, by the way, because we have been growing from 20,000 to 40,000 and 40,000 to 80,000. So if that trend continues to 160 and 320, not that bad. However, we don't know that. It might be that the bull market is still forming and that the moving average will separate again, will diverge again from the geometric mean. Notice that you can't have a bear market, a big crash, when the 200-week moving average and the geometric mean are together. The big crashes here are happening when there's a diversion between the two lines. Also here in 2018, there was a big gap between the two moving averages. Same here in 2014 and 15. In fact, if we look at historical situations where the lines are together, that would be here, end of 2020, that's when the bull market began. The end of the bull market, the FOMO phase. Same in the beginning of 2017, where the lines were together. So, moving average and geometric mean together could mean the bull market is about to start. In my opinion, when S&P will bounce back, when the markets have adapted to Trump's tariff policies, when it bounces back to 6,000, Bitcoin will probably be above 100K again. And in fact, if it's a question of when rather than if the S&P grows to 7,000, that would fit a Bitcoin price of 300,000.
Plan B says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Plan B has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
But here's the thing. A recession is very expensive. This is all the recessions since 1929. And in general, the fiscal response, which is what the government has to do, matches the decline of the GDP, which means the median fiscal spend is around 2.2% of GDP. So if the US has a recession, Congress has to spend $660 billion to try to, and that's a minimum to try to get the US out of a recession. Well, that would just negate all the benefits of the tariff. The tariff rates that were shown are absurd. You've heard from many people talk about this. They are very hard to believe because the tariffs levied on China, for instance, is 34% on top of a penalty of 20%. Europe now has a 20% import for all products. Japan, 24%. Korea, 25%. Japan and Korea are allies. Additionally, I'm sure you've heard, but these exhibited tariffs charged to USA rates are not actually tariff calculations, but it looks like it's a measure of the measure of the total deficit to the amount exported. Now, there are plenty of signs that Trump wants a deal. Now, I know I just showed you his lieutenant saying he doesn't want a deal. But keep in mind a couple of things. The implementation date for the higher rate is April 9th. That is a delay, and I think that's intentional. Thursday evening after the market closed, and he says tariffs give us great power to negotiate. Specifically says every country's calling us. That's the beauty of what we do. We put ourselves in the driver's seat. If we'd asked for the countries to do us a favor, they would have said no. Now they're doing anything for us. The tariffs give us great power to negotiate. Now, keep in mind, 6 countries, maybe 7, are really at the heart of this tariff negotiation because they represent the bulk of the dollars. If you look at the dollar amount of goods imported on the left side, okay, and there's a lot of countries listed here. The overall tariff rate, according to Goldman Sachs, is 12.6%, which is actually better than Goldman feared at 15% was their base case. And the reason it's not in the 20s is because there's a lot of products exempted. But I do want to focus on those 6 or 7 that I just mentioned. Collectively, that's about $582 billion that are subject to tariffs, or that are, it's $2.2 trillion, and the overall tariffs raised from these are roughly $582 billion, or 70% of the tariffs. So at the end of the day, these are really the countries to focus on. Interestingly, on Thursday's trading day, these 7 countries outperformed the US. I think it's potentially a sign that they expect some sort of negotiation. And in fact, if you look at it since February, these countries, 7 of 7, outperformed the US with particular outperformance today.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?